Hey there, listeners. Welcome back to another episode of Capital Markets Quickie. As always, I'm your host, Endrit, and let's get right to it. Well, U.S. stocks took a bit of a breather yesterday. The mood? A tad uncertain, especially with some hotter-than-expected inflation data on the table. Looking at the big names, both the Dow Jones and the S&P 500 pretty much stayed where they were, while our tech lover Nasdaq managed to sneak in a modest gain of about 0.3%. Now here's a stat that caught my eye. U.S. wholesale prices took a leap last month, marking the quickest jump since April. With a rise of 2.2% for September, it went way past the 1.6% many were expecting. What does it hint at? Well, those inflation ghosts are still around despite the Fed's active rate hike game. Speaking of the Fed, minutes from their last powwow revealed that there might just be one more rate hike for this year. Let's keep our fingers crossed, shall we? On the bond side of things, we saw Treasury yields backpedaling from those 16-year highs after the situation in Gaza escalated. Yet, some experts are saying not to breathe easy just yet. The rationale? Well, there's no strong economic data suggesting yields will keep on this downward trajectory. Here's something interesting. More folks in the finance world are now thinking the Fed might just skip the rate hike in November. Why, you ask? They reckon the recent bond yield jumps are already doing the Fed's job. And as we look ahead, keep an ear out for the U.S. consumer inflation data set to drop on Thursday. If it's heftier than expected, the Fed might just feel the itch to make a move. All right, folks, that wraps it up for today. Always a pleasure sharing these tidbits with you. Stay sharp and catch you in the next one.